Hi everybody, Marco Carbajo here from businesscreditblogger.com. Today's video we're going to talk about how to build business credit fast. In this video you're going to learn 5 different strategies on how you, whether a startup or existing business, how can you get cash credit or lines of credit for your business as fast as possible. We're going to share with you how to build up 10 or more trade lines on your business credit report as fast as possible. So let's get started. Now, why build business credit? When you structure your business as a corporation or limited liability company, it becomes recognized as a separate legal entity with the ability to enter into contracts. Now, you'll get an employer identification number, also known as your EIN. And this number is used to identify your business not only with the IRS, but also with banks, lenders, suppliers, vendors, and other businesses. Now, your EIN is also used to create a credit file for the business with business credit reporting agencies such as Dun & Bradstreet, Equifax Small Business, and Experian Business. So what you want to view your company's EIN number as the social security number of your business. Now, you'll see in the bottom here for more information on our business credit building tips here, the 5 ways that we're going to cover it. You want to get more information, go to businesscreditbuilders.org/business-credit. Now, what's the benefits of building business credit for your company? Well, the most important thing is this protects your personal credit. As you know, as a business owner, when you're using your personal credit and that's all you use, whether it's getting just personal credit cards for the business, this also impacts your ability to get personal funding for yourself, whether you're trying to get an auto or mortgage or apply for personal credit cards. All your business debts will show up on your personal credit. So that's why you want to build business credit, because that information as far as the debt that you carry, the credit that you use, will only report to the business credit agency separate from your personal credit. So that's key, is separation. Now, as you know, when you have a corporation, limited liability company, you have to protect the integrity of the corporate veil and keep your personal and business finances completely separate. The reason why you want to do that is because when you commingle funds, it not only jeopardizes the protection of the corporation or your limited liability company, but also during tax time, it also is a nightmare for your bookkeeper or for you separating your personal expenses from your business expenses. So you want to have that true separation. You don't want to commingle. Now, this limits your liability as well when you build your business credit. You could conserve cash flow, because there's different types of credit we're going to talk about in this presentation that allows you to get credit, whether it's net 30-day terms or revolving lines of credit for the business. And when you build business credit, you'll get better rates, terms, and credit approvals, because what happens is banks, lenders, suppliers, and vendors, right now, if you have no business credit entity established or no business credit rating or reports, all they can use to assess the credit risk of your business is your personal credit. So when you build a business credit report, this gives banks, lenders, suppliers, vendors, retailers, etc., the ability to check your company's business credit report as opposed to always relying on your personal credit alone. Now, as a business, you also have much greater credit capacity, 10 to 100 times greater credit capacity as a business. So if you're strictly just using your personal credit for your company, you want to grow your business credit because you have much more ability to get higher credit limit approvals, much more greater financing opportunities, etc. So that's the benefits of why you should build business credit. Now, the other thing that's key is as you have access to various types of financing for your business, whether it's vendor lines of credit, revolving lines of credit, bank lines of credit, etc., this is actually an asset for the business because your business will have the ability to get access to capital. So this is another key benefit of building business credit. You're building an asset for the business. Now, the first strategy is get business credit building credit cards. Now, this is key because many people who think about starting to build business credit is they think they have to strictly start with just getting vendor credit. If you have strong personal credit scores, a minimum of 680 FICO scores, you can leverage that good, strong personal credit scores to get 4 to 5 business credit cards that only report to the business credit reporting agencies. Unfortunately, the majority of business credit cards in the marketplace that you can see on the internet or apply for, those report, even though they're called business credit cards, they report to your personal credit. So they don't help you build your business credit. They don't create that true separation. So the types of cards that we issue in our business credit card program, they strictly only report to the business credit reporting agencies. This accomplishes several things. It allows you to build your business credit. You'll get 4 to 5 positive accounts reporting to your business credit reports. So by using the strength of your personal credit, the banks will issue 4 to 5 in our program, 4 to 5 cards in your company's name. They only report your activity and payments to the business credit agencies. So immediately this is going to allow your business to have 4 to 5 positive accounts reporting to the business credit agencies. This will also generate a business credit rating for your company, because for agencies such as like Dun & Bradstreet, it takes a minimum of 3 references reporting to generate a score for your business. So this is one of the fastest ways. In 14 to 20 days, we can get you 4 to 5 business credit cards. Once you get those, that's actual cash credit that you can use for the business. Anywhere that accepts Visa or MasterCard, you can use it for purchases. You could draw cash on your business credit cards. But immediately when you make your first payment on, let's say you charge your card and you have your first bill, you're going to now have these accounts reporting on your business's credit reports, not personal. So imagine you can get access to $25,000 to $150,000 in revolving lines of business credit through this program. Now, of course, this is all dependent on the strength of your personal credit. So if you have, let's say, 750 credit scores, you have good utilization, let's say on your revolving personal accounts under 50%, let's say you have great history, well, then it's most likely that you can qualify for a great credit limit. What I tell people is look at your highest personal credit card that you currently have, and you can possibly get 4 to 5 times that amount in business credit cards through our program. So let me give you a scenario here. Let's say you have a 700 credit score, and let's say we pre-qualify you for $50,000 in business credit cards. So in 14 to 20 days, you get $50,000 in business credit cards for your company. So now you have access to cash credit. But what's more exciting is, look at this, is you're going to have $50,000 in limits now showing up on your business credit reports. This is bank issued credit. So think about how powerful that is. Yes, you can get vendor lines of credit. We're going to talk about that in a minute. But imagine if you already get revolving lines of credit, bank issued credit, reporting on your business credit reports as a startup business, and with 50,000 in credit limits, let's just say, or even if it's 30, or what if it's 100? That is so powerful to have reporting on your business credit reports. Now, this also protects your personal credit when you're getting 4 to 5 business credit cards through our program. So the other exciting thing is if you're a pre-qualification, let's say you're hoping to get 100,000 in business credit cards, but we only come back at you with, like, say, a $45,000 pre-approval. We get you 45,000 in business credit cards. Remember, this is a stepping stone. This is now your business has $45,000 in access to credit, reporting on its business credit reports. You have access to cash when you need it. It's revolving. What's even more exciting is the cards come with 0% intro APR, anywhere from 6 to 15 months. And this positions your business for future credit limit increases from the bank card issuers. Okay, so 6, 12 months from now when they do an account review, you can get even more credit limit increases on your cards. So let's say that 45,000 we got for you increases to 60,000 or 70,000, etc. So this is what's really powerful about this program, because when you have strong, high credit limits reporting on your business credit reports, or imagine when other banks and suppliers and vendors check your credit and they see that you have bank issued credit, they see that you have $10,000, $20,000, $30,000 credit limits on your business credit reports, that allows you to qualify for even more higher credit limits with other suppliers, vendors, and even business credit cards. So if you're interested in applying for this particular program, now keep in mind, like I said, it takes 14 to 20 days. What you're going to need to do to pre-qualify for strategy number 1 is first you have to get a tri-merge credit report. We won't do a hard pull on your credit. We'll allow you to do a review in 24 to 48 hours looking at your tri-merge report. Go to businessfundingengine.procredit.com. It costs $1 for you to obtain your tri-merge report. Definitely, I suggest you stay in their program because it's a great service. You can get a tri-merge report every month. There's all these other benefits. But once you download a report in PDF format, then you're going to go to businesscreditbuilders.org/pre-qualification. That's where you're going to upload your tri-merge credit report, put in your basic information, and we'll do a review. You'll get an email confirmation when you click submit, and it'll take about 24 to 48 hours for our underwriters to do the review, and I will contact you to go over the results of the review, let you know how much in business credit cards we can obtain for you. At that point, we send you an agreement if you're ready to move forward. Funding takes about 14 to 20 days. We assign you your own processor, and you'll have your business credit cards in 14 to 20 days. It's as simple as that. Okay, so that's one strategy for you to get access to cash credit, build your business credit fast. In less than 14 to 20 days, you can literally, within a month's time, have 4 to 5 positive trade references with high credit limits reporting on your business credit reports. Strategy number 2 is vendor lines of credit. Vendor lines of credit is another great type of credit you want to get for the business. Let's say you do get business credit cards. Should you still get vendor lines of credit? Absolutely. The reason why is on your business credit reports, you want to show that your company can handle various types of funding. Revolving lines of credit is one type of funding. Vendor lines of credit is short-term financing. That's your net 30, net 60-day term. So you want to have various types, a diversity of credit reporting on your business credit reports. So think about like your personal credit report. What do they look for? You want to have some personal credit cards. You might want to have installment. You might want to have a mortgage on there, an auto loan, etc. That's why with your business, you want to have a diversity of credit. What's nice about vendor lines of credit is there's no personal credit check with the majority of vendors out there. They will extend anywhere from 500 to even as high as 5,000 in net 30 terms. You have the ability to purchase products or services for your business with net 30-day terms, and this helps you conserve cash flow and establish positive trade references for the business. That's provided that the vendor reports to the business credit agencies. In our business credit building system, we supply you with those vendors that report to the business credit agencies. If you'll see down here at businesscreditbuilders.org/business credit, we'll explain our business credit building system. So that's something you may want to take a look at. But keep in mind, if you do have vendors that don't report to the business credit agencies, you can still use those vendors as trade references on applications. Now, what's also unique with vendor lines of credit, there's no personal guarantor. So this limits your liability for building business credit. It's a great way to get access to short-term financing for your business, reports to business credit agencies, and this builds positive trade lines with net 30-day terms. And of course, this protects your personal credit. When you have vendor credit, none of it shows up on your personal credit report. So you may be familiar with some of the vendors out there, like your Quills, your Ulines, etc. Those are just great starter accounts. Those are some of the ones that you probably hear about all over the internet. But there's many other. There's actually over 6,000 vendors out there that report to the Business Credit Reporting Agency. So you'll want to check out our business credit building system if you're looking for those type of sources. Now, the strategy number 3 is getting retail business card accounts. Now, we talked about vendors, but there's also retailers out there, major name brand retailers that issue you cards in your business's name. Of course, like Best Buy, Staples, Home Depot, Lowe's, Costco, and Sears. Those are just some of the major retailers out there. And they work like a traditional credit card, but you can only use them at that particular retailer. Okay, so now if you're going to apply for these types of accounts, there's 2 options you have. You can use a personal credit check to get a retail business account for the business. If you're looking for no personal credit check, then you'll want to have some trade lines already reporting, at least 5 vendor lines of credit reporting on your business credit reports before you attempt to apply for major retailer accounts. We cover this in detail in our business credit building system. The reason why is these major retailers expect your business to have already an established business credit report, an established business credit rating. You want to have some payment history on your business credit reports if you're looking to get a retail business card account with no personal credit check. Now, these report to the business credit reporting agencies, and it builds positive trade lines reporting your business credit file. Strategy number 4 is to get a company fleet or gas card. This is a great tool because when it comes to building business credit history for your company, many times you'll hear people say, well, just make one purchase on your vendor account. That'll be a positive trade line. Remember, it's not just making one purchase. You have to build consistent payment history. Activity is key, credit activity. So you want to use credit sources for your business that allows you to have ongoing invoices, ongoing payments, so you have that ongoing payment history. So what is something that you use on a consistent basis? Gas. You use gas to fuel your car, to maybe to go on appointments for your business. You may have to see clients. So that's one great way for you to build consistent payment history is through using a company fleet or gas card. Now, a gas card is better for a business if you have a single vehicle. Let's say you're the only owner, you use your car for your business, then you want to get a gas card. Now, a fleet card is better for if your business has, let's say, multiple employees or you have multiple trucks, and you're going to use gas a lot for your transportation, etc. And that's where a fleet card comes into play. Now, the majority of all the large oil and gas companies such as Shell, Chevron, and Exxon, they require 3 to 4 trade references on their business credit apps, and they're going to check your business credit report. So if you're looking to get these types of cards with no personal credit check, you have to have those trade references already available. You have to have a business credit report with at least 5 trade lines reporting and a business credit rating. And this holds true for providers that specialize in fleet cards, such as FleetCor, Fuelman, and others. Now keep in mind, all this information, the criteria, what's required, and how to build up your business credit report, we cover in our business credit building system step by step. So you would definitely want to check out, again, a shameless plug, but businesscreditbuilders.org/business-credit. Now this also reports to the business credit agency. So this is another way for you to build up your company's credit report. And this also builds a positive trade line. Then strategy number 5, and this is really exciting because if you accept credit cards for payment from your customers, one of the things is obviously you have fees that you pay. You have merchant processing fees that you pay to your credit card, your merchant provider. The key is that's an expense that you're paying on your transactions to that merchant account provider. There is actually one merchant account provider that actually reports those fees to the business credit reporting agency. So as you're accepting card payments from your customers, you're building your business credit. So that's strategy number 5, is switching to a processing fee reporting merchant provider. So whether you accept Visa, MasterCard, Discover, American Express, fleet cards, etc., this particular merchant account provider allows you to build your business credit history because they report your processing fees to the agencies. So just imagine, every time you're accepting payment from a customer, you're building credit history. So this is really exciting. So if you want to check that out, bestmerchantcardservices.com. Just put in information there. You'll get a call within about 24 to 48 hours from a merchant specialist, and we'll go over any questions you have and get you set up. And they have a really nice program with 0% processing fees, I believe, for the first 90 days. But this is a great strategy for you because it's another way for you to build consistent history. So some of the things we talked about today in this video, we're talking about the 4 to 5 business credit cards. That's about 4 to 5 positive references reporting on your report. We talked about vendor credit. Let's say you get 3 or 4 of those. And let's say the retail business card accounts, you get 3 or 4 of those. And if you get your fleet card, one fleet card, and you have your switch to processing fee reporting, you're talking about 12, 13, 14 positive references reporting on your business credit report. And we covered everything. We covered revolving lines of credit, short-term financing, we covered retail credit, and then you have processing fee reporting. So these are just all great 5 different strategies for you to build business credit fast as possible. Make sure you check us out, businesscreditbuilders.org/businesscredit. Our blog provides lots of free information and videos like this, businesscreditblogger.com. So if you like this information, definitely click the like button. We'd really appreciate it. And subscribe. Click the subscribe button because you'll be notified every time we come out with videos like this that teach you on how to maximize your business credit, how to get the funding you need for your business, whether you're a startup or existing company. So with that, make it a great day. We'll talk to you real soon.